NVIDIA may be America's top performing stock after more than doubling this year alone. But if you're holding NVIDIA or thinking of buying it to get a stake in the 7 trillion AI market, you're going to want to see Mark Chaikin's new AI prediction first. Mark is a regular on many major news outlets from Fox Business to CNBC and built the stock indicator Wall Street uses to find winning stocks. His award-winning system flashed buy on Tesla before it climbed 335%, Moderna before it climbed 300%, and Riot Blockchain before it climbed 10,090%. It also found NVIDIA at the start of 2023 before its massive bull run. But right now, Mark is stepping forward to warn people to stay away from NVIDIA. My system has indicated that NVIDIA is no longer the best stock to buy to profit from AI, Mark says. In fact, it just flashed buy on a totally different AI stock. And today, he'd like to hand you the name and ticker symbol of his #1 AI stock to buy right now. For a limited time, you can get this information for free at aifrenzy2023.com. Again, that's aifrenzy2023.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show. Well, as the U.S. debt pile soars to $33 trillion, fears are growing the U.S. has entered into some sort of debt spiral, creating a vicious circle that the Federal Reserve will not be able to escape. So, will this benefit assets, including Bitcoin? Joining me back on the show is Clem Chambers. He is the CEO of Online Blockchain. Don't let the name fool you because he's not always bullish Bitcoin. Clem, good to have you back on.
I like to be bullish when it's going up. I like to be bearish when it's going down. You know, one's got to be able to change one's direction.
Well, let's talk about Bitcoin as price action. I mean, look, it's been the doldrums, right?
Well, not really. I mean, it's been very quiet. It's been trading in a tight range. It's not been very exciting. But I don't call $28,000 a Bitcoin a doldrum. If it was like 7,000, I might go along with that. But I mean, it's expensive. It's right up there. I mean, it's halfway to its peak, and it's not trading very busily, and it's no one's talking about it, and there's no rah going on. So it's even more amazing that it's still up there, 25, 26, 27.
Well, I want to quote, because you in fact say Bitcoin's volatility used to be considered by many, especially old school institutions, as the bane of crypto, right? Like we were always attacking its volatility, but that now seems to be gone. Volatility is now in line with mainstream indices, but perhaps not for long, you say.
Well, the thing about volatility is traders and people who like to speculate love volatility. That's what they live for. And so really it's, in a sense, quite bearish that Bitcoin isn't volatile, because a large part of the audience are people that want to, for better or for worse, gamble on the price. So, that's kind of a negative for the price, because it gets boring and people go look at other things, don't they? So, boring is never good in the markets in terms of bullishness. When things are going up, big time, there's always lots of, discussion and news articles and headlines. But it is very quiet, but it's still very, very high. So, I mean, I think that is, I'm bearish, but, trade what you see. And what you see is that it's still pretty strong. And, of course, it's waiting for the ETFs, which I don't think is going to be any good, frankly.
Yes.
And it's waiting for halving, which is March.
Okay, so let's talk about the ETFs, because you're one of the few who is not rah-rahing and cheering on the arrival of an ETF. You don't see it as, you don't think it'd be a game changer for the price. I mean, why wouldn't you want a Bitcoin ETF?
Well, for a start, it's a gateway to generating fake Bitcoin. If you're putting your ETF based on futures, for example, they're not real Bitcoin. That's the future price of Bitcoin. And it's all paper, like paper gold. Gold ETFs can be just basically paper gold. And there's lots of paper gold, paper coppers, paper silver. And the supply can be magnified by all these instruments, because you're buying a contract on the price. You're not buying the actual thing. So there can be trillions of dollars worth of contracts on the thing that you think you're buying or you think that you're trading. but it's not the actual physical. And of course, half the interest and excitement with crypto, and particularly Bitcoin, is that you have to have Bitcoin, and Bitcoin isn't printable and no government can inflate it. Well, if you start having people wandering around saying, well, I'll sell you a price on Bitcoin, I'll give you a contract that I'll settle in cash. Well, it doesn't actually increase the demand for Bitcoin at all. It might actually lower the demand because of people who are supplying paper contracts based on the price of Bitcoin. So, and you've got to think who it is that's offering these paper contracts. It's banks. It's all those people that Bitcoiners are meant to hate. All those things that people in crypto are meant to hate. It's centralized. So the other thing you have to think about is, where does the profit from providing all these Bitcoin services go? Well, it doesn't go back into crypto. It goes to their yachts, doesn't it? It goes to the providers of all these paper Bitcoins. It goes to their bank accounts. It doesn't go back into crypto. So you have to think about where the money flow is going. And it could be the money flow going out of Bitcoin into fiat via the creation of these contracts for difference, or that you could call them that, or whatever, futures, options, and all that stuff, which is not actually Bitcoin. Bitcoin went up because money came out of fiat and was put into Bitcoin. Well, this could be actually the reverse of that.
Well, let me ask you this, because the last time you were on, like I said, you were quite bearish. You're even talking south of 12,000. Now where do you stand?
Yeah, sure.
So now what's your forecast?
Well, my forecast is this, is that I don't know. I mean, it looks bullish, but then you've got the SEC and the hellhounds of American justice after crypto in general. So you've got to ask yourself, who's going to win? Is it going to be all the rebels of crypto, or is it going to be the SEC? Is it going to be the American state that doesn't want any competition with its currency? So, I mean, that's why I'm not bullish. I should be bullish, because I look at it and it goes, well, that's really bullish. Oh, the halving is coming. Oh, that's really bullish. Then I look at the SEC, who are going to throw the old FTX guy in jail and throw away the key. And all the things that they're doing, harassing pretty much everybody in the US in crypto land.
Right.
And are they going to get their way? And what is their way? And what is the landscape of crypto in America going to be like once that's all settled down? I mean, is it going to be prohibition? Or is it going to be nearly prohibition? Or is it going to be sort of prohibition by another name, where it's so expensive to actually operate in crypto as a proper business that you can't afford to, can't afford it, period. I mean, the actual wonderful nature of crypto is destroyed because it's basically wrapped up in all these layers and layers of compliance that are going to come down the line. So I would put my money with the American government. And if you think the American government wants Bitcoin and crypto around, I think you're mistaken.
So you wouldn't, what would you do? What would you be? I mean, you're an investor of Bitcoin, but what should I be reading in between the lines there?
Well, I mean, I have been a big investor in crypto. And at the moment, I don't think I know what's going to happen there. And I don't think the market does, which is why it's trading in this tight range. The halving should be very bullish. And it's going to come in March. So I'm kind of really hanging out for that. And I'm hanging out for the next wave of enforcement that's going to come from the likes of the SEC, because they've gone all quiet a bit. And I would expect
Sorry, I was going to say, how much of the enforcement do you believe, or maybe not believe, is correlated to an arrival of a central bank digital currency?
Not at all. Not at all. I mean, the Chinese can't make a CBDC work. It's never going to be like a crypto, because they could never risk a programmable dollar. Because, what happens if some North Koreans show up and steal all your dollars? I mean, a government simply can't take the sort of risk that a creator of programmable money in the private sector can make. They simply just can't make a competitive crypto. They can make a crypto-ish thing and then use it for all sorts of reasons, good or bad. But it doesn't compete with crypto, because they'll never be able to make it as well. They won't be able to take the risk to make it be able to do the sort of things that Ethereum can do. Yeah, even now.
But the government might see it as a risk, right? I mean, even Robert Kiyosaki came out saying, once central bank digital currency comes out, then Bitcoin goes to zero, because the government could view it as a risk, whether that's, accurate or not, because they probably don't even understand Bitcoin correctly. But that would be a reason that they'd want to crack down.
Bitcoin, you see, the governments have one major monopoly. It's the monopoly of violence. And they also have the monopoly on money. If you go and call something the Clem dollar in America, that's a felony. You can't go around printing silver coins and calling it currency in America. That's a felony. You can't compete with the American dollar by issuing currency within America. That's why they call them rounds, not coins or currency, when they make little silver ingots. Yeah. So, America, no country wants more competition to its own currency, certainly not internal competition. So that is what crypto is. But a CBDC, a central bank digital currency, simply cannot have the functionality that a crypto does, because it will be too risky for governments to have that sort of functionality in their own currency. Now, that means it's not a replacement for crypto, but it won't stop them trying to prohibit it, because
exactly.
You could say it's better money. Yeah, I totally agree. But it will never be a replacement for it.
No, you and I know that, but I'm saying they're going to see it as a threat. Okay, but let's move on. Let's talk the Federal Reserve. I want to get your take, because Bill Ackman came out this week saying that the Fed is likely done hiking interest rates as U.S. economy is starting to slow. I bring this up because it's a stark contrast to what we heard Jamie Dimon say just last week, saying, no, get ready, because the Fed might keep hiking here substantially. Where does Clem Chambers fall? Which camp?
Well, you see, it all comes back to their balance sheet. Now, raising interest rates and saying interest rates are here, now they're here, or now they're here, is one thing. But tightening will raise interest rates without having to change the base rate at all, because the cost of money will go up, the cost of treasuries will go up, because you're tightening. And they are tightening. I mean, they're really tightening. I mean, they're tightening in a straight line. And what the Fed's going to do is keep on tightening until, one of two things happens. The first thing is, likely to happen before the second. The first thing is until something breaks. When something breaks, they will then loosen. And then there'll be things going on to make sure that it doesn't cascade, and that things don't turn into a rout or a crash or a sudden, very acute dislocation. And that's what we saw with the Silicon Valley Bank, etc., a few months ago. They were tightening and something broke. And what it was were the smaller banks. So they stepped in, they basically implied that they guarantee all deposits, and they bailed out, did some bailing out, and that fixed it. Okay? And now they're tightening again, tighten. They will keep tightening until inflation goes away. Now, if it doesn't go away, they're still going to keep tightening, because they've got trillions of dollars worth of tightening in their balance sheet. Now, the thing to look at is the reverse repo, which is where all the excess money is stored. So all the money that's causing inflation is basically, you can kind of semi-measure it by how much is in the reverse repo account, where the banks stick their cash with the Fed and say, pay us some interest on this, and we've got no home for this money, we've got too much money, you hold on to it for us. And that started to drop. They've been tightening, and now it's starting to drop. And when that's dropped down to where there isn't much money going back into the Fed from the major banks, that will kind of be around where there's a point where the inflation is gone away. So they're the two things to watch out, because the bank can say, we're going to drop our base rates by 1%, but we're going to tighten like crazy, and Treasury interest rates are going to go through the roof, because interest rates are set, but in the bound by the availability of money. And so what you're seeing is tightening at the moment, which will push up interest rates, even if it doesn't push up the base rate. And until that tightening stops, and it won't stop until inflation is gone, you will have this upward pressure on interest rates.
Let's wrap with this, Clem, because this week Donald Trump's civil fraud trial in New York began. I mean, the campaign trail is heating up. You know, I always love talking politics with you. Any sentiment or inkling, gut feeling as to who will run, who will survive, who will win?
Well, it's kind of a very poor reflection all round, isn't it? I mean, what's the choice? What's the choice? I mean, it's a terrible choice to have to make. It's not as if there's a candidate you can say, well, you know, look at him. He's young and bright and thrusting. Oh, look at that guy. He's got a different point of view, but you wouldn't mind him having around to a barbecue. I mean, you've got two geriatrics. I mean, that's terrible, isn't it? It's a terrible, terrible state of affairs. And, you know, I think you'd find that if Trump got re-elected, then, you know, he will be more crypto-friendly. I think he'll be more economic friendly. But, you know, I think he's going to have a hard job to dislodge the incumbents. But, I mean, it's just a shambles, I think. And it doesn't bode well, because if there's a shambles at the top, it's very hard for everything else underneath it to be anything else but a shambles.
Clem, let's wrap with anything that's pressing for you, keeping you up at night, that you want to share.
Nothing's keeping me up at night, but I mean, I think that really it's going to be a volatile market, but we're not in for any terrible news. We're not going to be getting any crashes. I think particularly in somewhere like the UK, where I know your viewers are not particularly interested, I think that's going to be a good market for the next year or two. The important thing is, I believe the global economy has turned. So we should be on the way out of the doldrums, and we should be looking towards some good times. But over the medium term, not immediately, because there are lots of issues to work out. So it's going to be a bumpy road, but it's going to be a road upwards.
I mean, why do you think the global economy has turned? I mean, even in Europe itself, they're looking at a recession right now.
Because, yeah, I mean, you know, if you're reading it in the headlines, it's already happened. This is happening right now. It's literally only maybe a couple of months in. I mean, everything's the English phrase, rammed. Everything's very, very busy in Europe. Very, 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 very busy on the streets, for example. That's a new thing. You're seeing inflation is moderating. That's a good thing. You're starting to see lots of the kinks that got put into the economies getting ironed out over time. So that's a good thing. It's just that, you know, people confuse the bottom of the market as the worst possible place. But in fact, it's the best possible place because it's only up from there. So, you know, we have seen this year the bottom of the market in terms of the economies of the world. And therefore, I'm now bullish. In fact, I'm wildly bullish in the UK. And,
wow.
You know, we're past that point of where the momentum is down, and now the momentum is up, or at least not down anymore. So I think that's very good for the next 2 or 3 years. You'll be seeing, you know, good times coming back in 18 months, and we might have a good bullish return of the global economy for, you know, 2, 3, 5 years even, which is great.
Well, let's hope you're right, Clem Chambers of Online Blockchain. Always good catching up with you. Thank you.
You're not used to me being a bull, are you?
I'm not. I'm like, where's the real Clem Chambers at?
You've got to be able to change direction. It's no good just being a bull and all the time, or a bear all the time. You know, if you can't notice when the market's changed, what are you doing in the market at all?
Clem Chambers, come back soon, okay?
Will be.
Bull, bear, or whatever you want to be. All right.
See you soon.
Unicorn. All right. Thank you, and thank you for watching the Daniela Camboni Show. We'll have more content, great content coming your way, so be sure to stay tuned and sign up, DanielaCamboni.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.